The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we wrapped up the trade on Friday, soybeans and soybean meal found some decent strength, while corn and wheat kind of hung around the doldrums again. I guess in the case of corn, it was mixed on the session. Cattle, though, had a strong day to wrap up the week on Friday. So we have a few positive notes to take away from the week of the trade and from Friday's session. Let's talk about it. Joining us for a conversation, Dwayne Bussey with Bolt Marketing. Dwayne, good to talk with you again, my friend. Thanks for joining us here on the show today. And it's been a tough week, but we found a few nuggets of positivity, right, on Friday?
I was kind of grinning during the intro. I got to be honest, Jesse. I could just hear it in your voice. You and I have talked and known each other long enough. I'm like, boy, you are really trying to sugarcoat it. I'm like, hey, we got some positives today, and the market finished okay. Hey, you're right, we did, but sadly, I mean, the up 10 cents on beans usually would be a good thing. But when I look at a chart for March soybeans, we didn't make a higher high than yesterday. I'm sifting and trying to find news because if I'm going to do this interview with you, I want to tell people why it went up 10 cents. And I find nothing really.
Mm-hmm.
I think it was just a short covering bounce after a really crappy week.
Yeah, I think the money flow was just good enough into beans and bean meal, or you said this to me before we went live, that the funds just decided not to sell off soybeans on Friday. That might have been part of it as well, because in the broader sense here, Dwayne, you're right. I was maybe trying to sugarcoat it a little bit. Things are not good in grains right now, especially the funds just control these markets. It's just they have a chokehold on corn, soybeans, and wheat right now, and it doesn't feel like there's anything that's going to loosen that grip right now.
No, you're right. I mean, they've been selling it hard, and I noticed a little bit of a pattern in the soybeans. Now that I've noticed it won't happen anymore. That's kind of the way the trade works, but it seems like the funds on Monday and Tuesday are not selling soybeans hard, and that makes for bottom pickers and smaller traders to come in and think, oh, here's the low. I'm going to get to pick the low, and it rallies up. Then by like either the Tuesday night trade or Wednesday, it seems like they come in full force after, of course, the commitment of traders report retaliation is done, and then sell it midweek hard. And today felt like a day where, like you said, they just weren't here to sell it hard. Not that they're giving up. We'll find out on the commitment of traders report. But I think these funds have got to go massively short these markets, sadly. They have to stop selling before we can start talking about a bottom.
Yeah, no, I think that's very, very true, because I know some people have been asking, well, where is the bottom, and trying to call a bottom here. And, I've heard a few people say, well, maybe we need to get a 3 on corn and things like that. But I think in this environment, it's so oversold. I don't know if we really can pick a bottom here. I mean, we could look at charts, I'm sure, and make a best guess, but
right.
I don't know if we can pick a bottom in this environment, Dwayne.
No, I like what you're getting at there. It's chart support. I mean, we're looking back way on continuous charts now, right? So it's not like it's big time solid support or a contract low or something like we're looking at in beans. I mentioned the $3. Maybe we got to get below there and put a $3 print, $3.99, $3.98. I'm just throwing a number out there, though. For me, it's more getting to the point of being emotional. That I think you have to flush all the bulls out of a market and get everyone bearish. And when everyone's bearish and nobody's bullish anymore, there's your low. And we won't know that till afterwards, of course. Otherwise I'd be some genius and you and I would not be talking from a pickup in a small office. We'd be talking from an island somewhere. But you get my point. I think that's what's got to happen here. And there's still bulls out there in the corn market, but it is starting to flip. And I'm just talking from experience. It just seems like that's the way the algos trade against us. And once everyone's bearish and giving up, then we'll see a low. But, even when we find a low, it doesn't mean we're going to go skyrocketing higher and make a nice upward trend. I think sideways to, maybe it's 4 to 4.30 back and forth is what corn trades until we have a weather problem in the United States.
Or a weather problem with safrinha corn in Brazil. I mean, that's the other thing too, because right now the weather in South America is good. There isn't really a story yet. There's been some chatter there could be, but as of right now, this moment, there's not a weather story in South America, it seems.
Right. They were short moisture early, but recently it's all good. For example, this morning, I was kind of watching southern Brazil, Paraná
Okay.
area. I was like, man, they've been dry lately. Just watching the maps, I'm not there. And all of a sudden this morning, that's the spot that in the 6 to 10, 8 to 14 day forecast hits heavy rain. I'm like, man, we just can't get a drought area going there. Now, yes, I'm making it sound like I'm cheering for a drought in South America. And yeah, the farmer in me, of course it does a little bit. Argentina is going to get a little dry again, but boy, their crop conditions and soil moisture levels just went up a lot this week. I mean, that was a big rain week for them. And yeah, big crops down there. You're right. The safrinha corn crop is just being planted now. So we should have a whole weather scare there yet. But when you look out in the 6 to 10, 8 to 14, even the 15 days out, it's just like, there isn't anything in the forecast to get this market excited or these bearish funds out of their short positions.
Well, and adding to the bearish weight too, we got those USDA Ag Outlook Forum numbers Thursday. I mean, they were pretty much in line with expectations, but again, they confirmed some big carryouts and expected big planted acreage, things like that. I mean, for the most part, that just piled on to the bearishness here in these markets. But I think it brings up the question of, we've talked about this before. I think that acreage debate's going to start to become a little more hotly contested now that we have some of these baseline numbers out there in the market.
Yeah, I think so too. And in one way, it's, if we're going to be bearish like this, let's just rip the Band-Aid off and get it over with. And, that Outlook Forum a lot of times does that, right? Because if you're trying to project something right now, you do project a trend line yield and mediocre growth in demand. And so I have no problem with the numbers they threw out there. One thing that did stand out to me, though, it just points at the bearishness of corn. You lose close to 4 million acres and our ending stocks still go up 400 million bushels.
That's a good point.
That's not good. But I'll say this too. I think they're too low on demand. Our exports have been really good lately. Never going to be good enough for us to have to ration demand, but lower prices are curing low prices. The thing is, we have to stay low to get that export demand to stay there too. So yeah, we're probably here to stay, like I said, range bound. But yeah, the Outlook Forum always is bearish, and let's get it out of the way. And now let's start talking about real things like, what if we don't plant all those acres, right? Like for soybeans, you're gaining 4 million acres, and your ending stock is only increasing 120. Geez, what if you only gain 1 million, for some reason, whether it's prevent plant or whatnot? So then all of a sudden soybeans can be tight. So I'm still pretty friendly new crop soybeans, I guess. And I know I'm supposed to tell you that, I did proper risk management and all my guys are hedged on new crop corn and soybeans, and I would be flat out lying. Jesse, if I told you that. I held people off, and I know that was a mistake right now, but when I look now at these prices, even though I'm bearish short term, I just don't like selling new crop beans when I know 4 million acre gain only gains us 120 in ending stocks. And I think demand could be even off there. It could be less than that. So better days are to come. It's just not today. Sorry.
No, well, and to that point with new crop corn, beans, or even old crop, I mean, if people are still hanging on to any old crop, it's just a tough conversation all around in this window in terms of what to do with your marketing right now. It's just it's not easy to have that discussion, is it, Dwayne?
No, it's not. Usually the discussion ends with some curse words thrown my way. No, it's really not that bad here. We did a very good job of hedging on the board this year, and then we were holding supplies looking for better basis. And so, yeah, now it's snowballing on us a little bit. It is a tough conversation because the basis isn't improving either with these lower prices, which just means even more proof that this crop is big that we just had. So there'll be better days. You get a pop. Pops are meant to be sold. You got to go out to the July carry if you've got good corn in good condition in your bins, and just capture that and realize that once it's sold, it doesn't mean you're done with the marketing year. If safrinha starts to get dry and hot, which could obviously happen, or look at the drought monitor. The only state that's really in trouble right now, according to that, is Iowa. Well, that's a pretty key state, as you well know. So something will happen. You can always buy it back if we rally into that.
We're having a conversation today with Dwayne Bussey from Bolt Marketing here on Market Talk. Dwayne, the wheat trade, real quick, was kind of the loser of the grains, but it's a lot of the same sentiments there. That cheap Russian wheat, things like that. Dollar having an impact, of course, and I mean that could maybe even bring in the economic part of the discussion with that hotter than expected inflation data. Between CPI and PPI all week. I mean, in terms of wheat, such a global market, it just feels like wheat's kind of stuck turning around at these levels right now, Dwayne.
Yeah, it sure is. We've said it time and time again, our domestic supplies are fairly tight. But if no one's going to buy it from us, then being tight doesn't matter. And there's too many other countries that are cheaper than us, Russia, Ukraine, both, and they make it sound like it's a fire sale getting their wheat out of their country. They don't care what price, just get rid of it. And well, how do we compete with that other than going lower? And Chicago wheat was odd for a little while this week. It was holding in a sideways trend near the 20-day moving averages, and I was like, geez, maybe we've made a low here, while Minneapolis and Kansas City were already at their lows. And the last 3 days just took care of that. Chicago went right down at lows here into the close today, and yeah, sorry, same story, just different day. We're too high priced to get much more export demand, and outlook for them doesn't help. That has us increasing the ending stocks, of course, but long summer in front of us. We'll see how this winter wheat crop comes out of dormancy, and maybe we can get a weather scare then.
Yeah, that's a good point. Something to keep an eye on there, but it just feels like I've used the term commodity deflation a lot this week, is kind of continuing in these markets. And the other term I've started to use a little bit more. I like it. Well, I don't like it, but I like saying it. Feed the bear. To your point about low prices curing low prices, it almost feels like we got to feed this bear too much to try and turn this market around. Would you say so in grains across the board?
Absolutely. No, I mean, and the funds are going to get heavily short and they push it too far. That's just what the markets do. As producers, somehow we hate this side of it, but we are totally okay when we're swinging it too far the bullish side. And, look at the cattle market last year. When the funds sold it, everyone was hateful and we didn't like the funds, but I'm like, well, they did push us all the way up to these new highs. So no, you're right. We got to just keep feeding the bear. Like I said, rip the Band-Aid off, let it get down. For March soybeans, I'm really looking at 11.45. That's a contract low. It's the only commodity that hasn't gotten down to the contract lows. And with Brazil's crop size, sure, maybe it's smaller than we first estimated, but we're still going to be over 2 million metric ton from there. So let's just get down to 11.45, where maybe South America isn't making as much money either. And then we can start to regrain, make a base, and go into the new crop year.
Good thoughts. Well, hey, you mentioned the word cattle. Cattle's at least a brighter spot, and really Friday too had a strong day again, led by feeders, but fats with some triple-digit gains. So, I mean, talk to me about this cattle market, Dwayne. I know you've been watching some things here this past week throughout the cattle trade and watching this market. So, let's dive in on the cattle side. What are some things we need to be looking at, thinking about right now?
Yeah, it was a great day. Great way to finish the cattle market this week. We had a pullback in prices, right? And I think that goes back to what you mentioned earlier, the CPI numbers, inflation still here. We had kind of money flow leave. I don't even know if they left the cattle market. Those funds that were buying, the opposite of the soybean market, they just paused for a little while. And that opened the doors for the technical traders to be like, this market is so overbought, it should come down. And as they sell, if no one's there to buy it, it just leaks lower and lower. March feeders could have went to 241, which is kind of the upward trend and where the 20-day moving average, and still been in a bull market. We've been bullish and buying that market, and luckily today that paid off because we finally jumped up. And it's not like I had really different news today than yesterday. I mean, cash cattle trade, for the most part this week, looks like it's going to finish up around steady money, which I call a little bit disappointment, but you can tell I think the trade's already thinking for next week. Cutouts strong yesterday. If they close where they're at midday today, that's like the highest since early January. So the demand doesn't seem to be going away. Look at the choice select spread. Select is skyrocketing up and catching choice. So this isn't we're getting too high priced on the pricier meats. I mean, pretty soon Select's going to be the same as Choice, so it won't matter. Hamburger is going to get expensive. So I think there's more to come. I'm rambling like I always do with you, but I think there's a lot more to come in the cattle market.
Well, I wonder in this window, I mean, risk management in cattle, should we be thinking about some hedging here and protecting our downside risks, some puts, locking some floors in potentially here, just because, what if something happens? What if this sticky inflation data is just too much for this cattle market? Or if, export demand for the week wasn't great. So I mean, there's some few negative things that could affect cattle out here. So am I not taking the chance at this point and trying to lock in some floors in cattle?
It's funny you mentioned that. What's really hard to do is to get producers to hedge when the broker says how bullish he is. A statement before. It's like, I might as well wait till the highs. And I understand that, but no, it's starting to happen in this office here, and I'm proud of the guys for doing it. I got some guys looking at like all the way out to April 25. It's at 192. Okay. We talked about, if I sell the board there, how much is that going to hurt me? And, that's, sometimes famous last words, but honestly, the answer is not a lot. I don't think. I think we're getting close enough, because we've got, as fun as it is watching the nearbuys rally, look at those deferred contracts. I mean, the same in feeders. We're 251 on the nearby, but we're 268 out in November. Man, those are great prices. No, at any point in time, I'm okay with buying some LRP, selling the board, buying some puts. If you want upside, you do the puts and the LRP type thing. But no, if we have inflation, if the economy is going to struggle, what do you think will get hit the hardest? And it'll be the cattle market. Like I said, my only caveat is I think the funds, and you'll see on the commitment traders report, they're not anywhere near the length they were last year when they were long record contracts. I think there's more to come, but man, like I said, I say that I almost feel like, don't listen to me, just do some risk management out there, because that's a big capital investment in any of these cattle pens anymore.
Yeah, very, very true. Very, very true. Hogs, that market looks a lot healthier than it did beginning of the year, in my opinion. I mean, 80s and 90s, there are cases, some of those deferred contracts, summer months. I mean, 98s in July and August. So, hogs, pork cutout value has been looking pretty supportive. Weekly export sales were really strong on hogs. So, I mean, I think there's some positive notes here in the hog market too. Maybe not as exciting as cattle, but I think hogs are looking all right in this window. What do you think?
Absolutely. And kind of surprised me too. All December we talked about the huge supplies and burdensome supplies, and China was liquidating their herd because they have too much pork, right? It's funny, typical China, right? They say that, but the whole time they were buying some pork from us. And you're right, this week they bought quite a bit of pork from us. You combine them in Mexico, and then we're over 70 million metric ton for it. It's like, whoa, what a sale there. So that's great. Even when China was on a holiday, they did that. So interesting. Demand is obviously better than anticipated, and our supplies are supposed to start dwindling as we go into spring. So like you said, you look at those summer months, knock on wood, and I don't want to jinx it, but we might have 100 out there pretty soon. And then guys probably need to do the same thing, start looking at hedging and protecting that. April struggled with that $86 mark, and we didn't bust through it today, but we sure didn't have the big profit taking off of it like I thought we were going to either. So this market looks strong to me. I don't know a lot about the hog market, but I can look at a chart and tell you, it looks like a strong, good market here.
Well, let's wrap up our conversation here today. And, good thoughts. Always great to talk with you and kind of just chat through what we're seeing in these markets today. And final thoughts for folks. I mean, what do you want to say? Reiterate to them? I know there's a lot of tough, like we said, a lot of tough conversations that have to be had. So, give us some wisdom. What do you think we need to think about right now?
Well, hey, if it does bug you, the cash prices and that, there's nothing wrong with, letting it go and just buying it back later, just wipe the slate clean. But, when I look at spreadsheets for new crop, we're starting to get in that negative territory, right, for returns. We got to grow this crop yet, Jesse. I'm not always the bull, but man, weather scares can happen. And when you got the funds, what I think will eventually be record short corn and soybeans, even a little weather scare could really pop this market. So don't be all doom and gloom. Just shut the screen off for the 3-day weekend, maybe look at some spreadsheets later, have those targets in place, because you and I talked last time about when we have that rally this spring, we need to sell it. Absolutely. So, but yeah, be positive.
Be positive. That's a good way to wrap it up here today. Dwayne, if folks want to reach out to you, ask some questions and maybe get some advice there, work with you potentially at Bolt Marketing, how can they get a hold of you, Dwayne?
Yeah, they can call us here directly, 605-448-2365, or they can check us out online at boltmarketingllc.com.
Dwayne Bussey with Bolt Marketing. Always good to chat with you, my friend. Thanks for joining us on Market Talk, and we will talk to you again real soon. Appreciate it.
Thanks, Jesse.
That's going to do it for Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.